Alright, I'm doing the S&P 500 update. What I would like people to know, Mr. Flag, is that the S&P 500 closed up 12.95 handles with lots of controversy today. The headlines were probably bigger than big because every other minute you had something about the contagion in Europe and about France and about Germany and about Italy, you name it. It was happening. The pink line up here is that 50-week moving average that we talked about. One of the things that we have as far as a bull cycle is that in the 4-week bottoming process, which I'm going to show right here and now, is you can clearly see that from these bottoms over here that you rallied on up, and that's that diagonal trend line there. The other thing that the 10-week moving average is not descending from the reversals down here. The support levels still remain intact for the bull across the body right here, and yeah, we're slightly above this multi-calendar 2011 year low. If we were to close 1 week, 2 weeks, 3 weeks above the 10-week moving average, the qualifier is it has to be pointing up, and you have to have 4 weeks closing price above it, just like you did in the bear cycle, the bear trend cycle. Now the bull cycle is just the opposite. It has to point up. It has to have 4 weeks closing above it to say that you're going to have a new bull cycle rally. You're in the middle of a year-end bull cycle rally with a lot of upward resistance here at this pink line, the 50-week moving average, which just so happens to be. Lots of volatility remains. Lots of fund managers have underperformed the year. They sit on the sideline. The bull has come back. It's been fighting back. It's the calendar seasonality period of the year where bull cycle trends happen so that they can at least try to get back to even and continue to go higher. However, we're above the 20-week, we're above the 10-week. So when you have the bear cycle that we had called for many months ago, is you're starting to finally see where that bear cycle, and it's all short term now. Very short term as we're in the heart of the earnings season, and the contagion and the TARP over in Europe and all the other things that play along with it. It's the very same kind of rally that we had in the fall of year 2002, that this rally point-wise, percent-wise, almost manages to be roughly right around the same. So you got a half a bull trend in cycle and another closing week above it. This is the time of year where stocks like to rally up in November and December. However, we're going to have major economic data coming out tomorrow morning, and GDP revisions will probably be revised. We got Ben Bernanke ejecting money in the system, lots of liquidity going in the system worldwide, and it's been a great bottom bear market rally up, changing into a new bull trend on the S&P 500.